Hi. Well, first let me apologize for not posting yesterday. Had some personal issues, one of which was the fact that I had a sizable loss yesterday, and I was licking my wounds instead of sharing my pain with you. In any case, back we are today, and the market ends up pretty much unch down 6 points. It was quite a ride today. We rallied in the last hour by about 100 points to bring us back to unch. We were up almost 200 points overnight, so it fell about 300 points from there, and then rallied from about lunchtime my time from under 16 to 16.2. So a good rally at the close. I was really not expecting it. I'm marginally ahead on the day, even with the market up. Last night I actually liquidated everything and started again this morning. I wish I'd started last night because, as I said, the market was up almost 200 overnight, but I wasn't in any mood to trade, and plus greed won out. I thought there was another potentially 100 points on the upside, and ended up capturing almost none of the almost 200 points in efforts to gain the last 100. There's actually a phrase for that in the trading world, and the phrase is "dick for a tick," and that is the guy who says the market's 15 bid a quarter, I will not pay the quarter, and the next thing you know it's 18, and didn't buy anything. Dick for a tick. Well, I often am dick for a tick, and it actually brings to mind an interesting question about trading, which is should you use limit or market orders? Because if you use market orders, you're probably going to get ripped a little bit on the execution, but if you use limit orders, you risk not getting your position on at all. So it's there are arguments in both directions. Jesse Livermore, a famous trader from the 20s, who's profiled in Reminiscences of a Stock Operator by Lefebvre, which is one of the best trading books out there, he always claimed market order. Always do a market order, just make sure you get the trade done, and that's a market order. In any case, a little side about trading, one of the things I worry about on a day-to-day basis. Let's get to the theme of the day, the outrage of the day, before we discuss the market any further. And what you're looking at is something from Zero Hedge, once again, and this is from yesterday. This is from ADP, and if you put manufacturing jobs in buckets by years, you can see that for the first time this decade, since the the end of the Great Recession of 08-09, for the first time this decade, the U.S. has not gained a single manufacturing job this year. As a matter of fact, it's down about 6,600 jobs. You would think that this kind of economic overdrop would cause the market to be weak, and we're living in a time where the weaker the data, the more likely that there'll be further easing, so the worse the news, the better for the market. It's very counterintuitive. It's very hard to trade when black is white and white is black. You almost want to fade yourself. Fading would be if somebody has a position and you take the other side. You almost would want to fade yourself, but if you start trading against your own instincts, well, that way lies madness, I think. In any case, no manufacturing jobs this year. I know from anecdotal evidence, people I know, that nothing is improving. As I talked about yesterday, healthcare costs, health insurance costs specifically, are set to skyrocket. If you consider a 50% increase to be skyrocketing, which I do, and yet the market blithely ignores all of this data. We're really at a period of indecision here, because on the one hand you could say that the market fell from 18.2 to 15.2, which is a 3,000 point move, and it's really only rallied 1,000 points from there, so you could say that it hasn't been much of a bounce and that the downtrend should resume. I am in that camp. I believe that to be the case. On the other hand, you could say that there's been no follow-through on the down move, and that selling has been exhausted and the dip buyers are growing more bold by the day. That's not my view, but that is my worry, because if everybody starts to believe that to be true, they will make it true by their actions. In any case, here I sit. I am still short normal-sized position for me. I'm not oversized. I can withstand some pain, but not very much, because if we get back up to 200 or 300 points from now, my conviction may well waver. In any case, I'm still hopeful that the direction remains down. Macro fundamentals have not changed. During the 08-09 crisis, when I had a similar position on, there were many days when hope seemed alive again. There was short Bear Stearns at the time, and there was news that the Chinese were going to invest. I think I lost mid-5 figures on that day. We all know what happened to Bear Stearns. I ended up covering at something like 20 and could have covered it at half the price, as it turns out. But I'm of the belief that the macro fundamentals will win out. All these market shenanigans just delay the inevitable, and that's really why I'm so upset, because if things could just reset and bad debts could be cleared away and prices could return to a reasonable price. For example, traditionally at market bottoms you've been able to get close to a 6% dividend yield. We're nowhere close to that. As a matter of fact, with the amount of money corporations have been borrowing to buy back their own stock, dividends may be under pressure now, as may earnings. In any case, I'm comforted by the fact that the situation continues to deteriorate. Comforted as a short, that is, not comforted as a resident here, because obviously the situation getting worse will impact me in many ways. I'm just hopeful that an increased bank account will help, will be balm on the wound. Good luck to you all out there. Take care.